If you have invested less than $25,000 in the stock market, then you got to own these 20 stocks, which consist of growth stocks, Magnificent 7 stocks, small cap stocks, dividend stocks, and popular retail stocks. And what you got to understand is that for everyone that has invested less than 25k in the stock market, you're basically in a luxury position. Because if you work an entire year, then you are able to save up 10 to 20% of your portfolio and invest it into bear markets. The problem for people that are investing big money is that they can't work their ass off in 1 year and gain 10 or 20% of their portfolio back. So they are forced to play it much safer. And their goal is to keep up with inflation and buy assets that will generate them money. But if you're investing with smaller amounts of money, then you will not be forced to dedicate a lot of money into dividend stocks, but then you will have to focus more on growth stocks that can double or triple your money very fast. Now looking at the 25 stocks that you got to own, the first section will be the best stocks of the mega caps. And those are Meta, Amazon, and Google. And in our portfolio, all these three stocks will be a 6% position because all these three companies will have a 10% plus growth rate for the coming years. These three companies also own multiple different businesses and they will be the biggest players in the AI revolution. So if you sum that up, 6% times 3 will be 18% dedicated to mega cap stocks. The second section consists of three very popular growth stocks and those are AMD, Sofi, and Tempus. AMD literally couldn't set itself up better for the coming 3 years and has a ton of growth left with their new chips in the production line. Sofi is a bank which is operating extremely lean and it's on its way to become a giant bank. And Tempus is an AI healthcare stock with insane growth and is a major player in the healthcare revolution and is making acquisition after acquisition so they can accelerate their growth and improve performance. And all these three companies will have a 30% plus growth rate the upcoming 3 years and AMD will be the biggest position of 7% and furthermore Tempus and Sofi will be a 5% position. So these three stocks will be 17% of your portfolio. And the next section of stocks will be the big gainers and these will really carry the portfolio. The first one I talked about in 2 previous videos and that one is called Mara Holdings, which is building up AI data centers. Just look at their PE ratio and look at their growth rates. I just want you to know that you won't have a lot of time to buy the stock. The second stock is called Harrow, which is focusing on eye care treatment. Their revenues are not really speculative like other healthcare stocks and they're projecting to grow their revenue 40% plus with a dirt cheap valuation. The first stock is called Duot technology. I also went more in depth on this stock in previous videos and they focus on high-tech equipment combined with AI and this company is growing their revenues 112% plus. Now that is discovering new markets in the data center security but also many new other markets such as border control and many inspection systems. The fourth stock is QXO. This company is a big play on the housing market. If you believe that houses in the US will start to move again, then you got to own this stock. And especially now that we're expecting rate cuts, which is very bullish for the housing market. Because this company is becoming the biggest player in selling construction materials and providing construction workers. The fifth stock is UEC, Uranium Energy Corp. They are focused on selling uranium energy, so nuclear energy, to the biggest household names like Google, Meta, and Amazon. And this nuclear energy will make sure they're able to power their massive AI data centers. The other very bullish point for this company is that the demand for uranium the upcoming years will be much higher than the supply. And this is creating a surge in uranium prices, which will accelerate their growth even more. The sixth stock with massive growth is called Applied Optoelectronics. This company is focusing on high-tech level lasers that are needed for these AI hyperscaler build-outs. And this company is growing at 100% plus growth rates. And their valuation is not reflecting that even a little bit. Now for the last 6 stocks that I covered with massive growth, you will have to make them a 5% position in your portfolio. Now let's do the math. 6 times 5% means that this section will be a 30% position in your portfolio, which is quite a lot, but obviously for good reasons. The next 5 stocks are the best performing companies in their own market, but all of these already got momentum and are on a great run, obviously for a reason. So luckily these companies aren't price expensive, but I would say fair, and are set up exceptional for the coming 5 years. Iren is one of these stocks. I bought most of my shares between $5 and $8, but now the stock price surged a ton and this company is trading at $33, which is still a fair price because this company will be growing a lot because they're mining Bitcoin and with that revenue they're reinvesting it into building data centers. And this is working out extremely well for them, so definitely a great company to own. The second stock is Celsius, and Celsius really really tanked the last few years, but since they bought the Elani company, which is an energy drink company, their revenues are skyrocketing again. This acquisition was very much needed and at the perfect time. The first stock is called Elf Beauty. The stock price of this company went all the way down to $50 in the April lows, and this company is making a massive comeback in the same way as Celsius with a great acquisition of the Hailey Bieber beauty company, which started the acceleration of their revenue growth, and that is also the reason why the stock price is now trading at $130. The fourth stock got also insane potential, but is probably one of the riskier stocks compared to all the other ones, and this company is called CRISP. It's a gene editing company which is working with other great similar companies such as Beam and Intellia Therapeutic, which you guys might have heard of, and these companies will have to work together to get through 5 stages, because only this way you can approve certain medicine and healthcare treatments, and CRISP is getting towards the first stage of this process, and if they succeed, this company will take off like a rocket ship. And the fifth stock is called Hesai, and this is actually a Chinese company. Some people will like it, some people will not. This company is entirely focused on LiDAR, and the people that are working there are very skilled. So as you probably know, LiDAR is used for cars so they can drive on their own, but also for drones, for their war machines, as you saw in their latest military parade. But remember, also robots. And this market is massive, especially in China right now. And this company has insane growth rates of 100% plus, and its valuation is still very cheap after the price surge. For these 5 stocks of this section of the portfolio, you got to make them a 3% position. So these stocks are not insanely influential on your portfolio, but in total it will be a 15% position. Now the next section consists of 2 stocks, which are both trading at $4, and these 2 stocks are pretty popular in the retail community, and they are literally a ticking time bomb, ready to explode at any time. And these 2 stocks are called Fubo and Honest. Fubo is a streaming platform for mostly sports content, and they recently had a Disney deal offer where Disney will own 70% of the company. Then I will tell you one thing, this stock won't be a $4 stock anymore. And the Honest company is focusing on baby care products, and this company is really a valuation play because it's trading extremely cheap, because it's expected that this company will start growing their revenue again the upcoming years. So for those 2 stocks, I want them to be a 10% position in total, so 5% each, because I don't see a scenario where their stock price will go down, so it's basically only up. Otherwise it's an investment that won't generate you any money. But yeah, I did the counting for you, and these are 19 stocks. So the question is, which one will be the last one with a 10% position? Well, for this last section, I divided into 10 stocks, because these are small cap stocks which are relatively risky, but have huge potential, with each of them being a 1% position, and some of these will become a 10% position in less than 3 years. But you never know which one it will be. But I will cover these best 10 small cap stocks in my next video, so make sure to like and subscribe, and I will see you guys in the next one.